Right now, small cap stocks are under pressure due to high interest rates. These smaller companies typically rely more on debt and domestic consumer spending, both of which are hit hard when interest rates rise. However, there is good news on the horizon. Small cap stocks are currently trading at bargain prices, and with the Feds expected to cut rates several times over the next 12 months, now could be the perfect time to invest. With this in mind, here are the 6 best small cap ETFs that are gearing up for a potential breakout that deserve your attention. Number 1, the Wisdom Tree Emerging Markets Small Cap Dividend Fund, DGS. The fund focuses on small cap dividend-paying stocks in emerging markets. It tracks its namesake index that include companies with a market cap of at least $200 million, weighted by annual cash dividend. DGS ensures no single country or sector exceeds 25% of the portfolio, and the index is reconstituted every October. The fund holds around 960 stocks, with Taiwan, South Korea, and India making up the largest country exposures. Its top sectors are technology, industrials, and financials. The fund's top 10 holdings account for only 8% of its assets, with Tricony Electronics being the largest at 1.1%. The fund has a high turnover rate of 53% and a mix of small and mid-cap stocks with an average market cap of $1.1 billion. It offers a strong 4.3% dividend yield and has a favorable price per earning and price to sales ratios compared to its category. Number 2, Avantis US Small Cap Value ETF, AVUV. AVUV is one of the top small cap ETFs, boasting over $11 billion in assets under management. The ETF is actively managed and focuses on companies with strong profitability and value traits. AVUV's portfolio managers also consider factors like liquidity and past performance when selecting stocks. The fund weighs these stocks based on their metrics compared to others in the Russell 200 Value Index. As a result, the fund's top sectors are financials, consumer discretionary, and industrials. The top 10 holdings make up just 9% of its net assets, and it has a low turnover rate of 7%, which is impressive for an actively managed ETF. With an average market cap of $3.4 billion and below average price to book and price to cash flow ratios, AVUV offers active management at a competitive fee of just 0.25%. Number 3 is the Dimensional US Small Cap ETF, DFAS. This ETF is a standout among dimensional fund advisors offering. Its primary goal is to achieve long-term capital appreciation while minimizing federal income taxes. Despite being actively managed, DFAS keeps fees low and aims to outperform its benchmark, the Russell 200, which includes 2,000 smaller U.S. companies. DFAS has been a strong performer since 1998, boasting an impressive 9.1% annualized return and outpacing the Russell 2000 by 108 basis points. The ETF is focused on industrials, financials, and consumer discretionary stocks. It holds around 2,000 companies with an average weighted market cap of $4.1 billion. Despite its size, the ETF remains nimble with low turnover and high diversification, with its top 10 holdings making up less than 4% of its $8.1 billion in assets. Plus, its attractive valuation metrics, including lower than average price to earnings, price to book, and price to sale ratios, make it a standout in the small cap space. Number 4, iShares MSCI International Small Cap Equity Factor ETF, ISCF. This is a passively managed ETF that tracks the STOXX International Small Cap Equity Factor Index. This index focuses on small cap companies from developed markets, emphasizing stocks with momentum, quality, value, and low volatility. Since its launch in April of 2015, ISCF has delivered an annual total return of 5.7% through April of 2024. just slightly trailing the index due to its 0.23% annual fee. Despite being the smallest of the featured funds, ISCF offers a strategic approach to international small-cap investing. This iShare ETF has around 1,000 holdings with an average market cap of $1.7 billion, which is significantly smaller than its index average. The fund average PE and PB ratios are also lower than the index. ISCF includes a mix of small, micro, and mid-sized companies with 47% in small micro caps and 50% in mid caps. The top three factors by weight are industrial, financials, and consumer discretionary. Geographically, Japan, the UK, and Canada are the top countries. The top 10 holdings make up just 5% of the fund's assets, with a low turnover rate of only 3.79%. Number 5, SPDR S&P 600 Small Cap Growth ETF, SLYG. This ETF tracks the S&P 600 Small Cap Growth Index, which includes small cap stocks from the S&P Small Cap 600 Index that exhibit strong growth characteristics like rising revenues and positive momentum. To be part of this index, companies must have a public float of at least 10% and 4 consecutive quarters of positive earnings. The growth index is market cap weighted and rebalanced quarterly, while the broader S&P Small Cap 600 Index is rebalanced annually in December. Like many small cap ETFs, SLYG uses a sampling strategy to closely match its index performance, meaning it doesn't necessarily hold every stock in the index. However, it currently mirrors the index with 346 holdings spread across $3.5 billion in total net assets. The weighted average market cap of these holdings is $3.6 billion, and earnings are expected to grow by 11.7% over the next 3 to 5 years. The ETF's largest sectors include industrials, consumer discretionary, and technology, making it a blend of both growth and value stocks, despite its small cap growth label. The ETF's top 10 holdings represent 11% of its assets, with a 48% annual turnover rate. Key stocks include Fabrinet and ATI, leaders in manufacturing and high-performance materials. Over the past decade, SLYG has achieved a solid annualized return of 9.2%. Number 6, Pacer US Small Cap Cash Cow 100 ETF, CALF. CALF is a standout small cap ETF that focuses on companies with strong cash flow. It tracks the Pacer US Small Cap Cash Cow Index, which selects 100 stocks from the S&P Small Cap 600 with the largest cash flow yields. These stocks are weighted by their trailing 12-month free cash flow, ensuring that the fund includes companies with strong financial health. The index is rebalanced quarterly, and individual stock weightings are capped at 2%. The ETF's holdings have market cap ranging from $375 million to $5.5 billion, with an average market cap of $2.8 billion and a notable average free cash flow yield of a healthy 10.4%. This ETF is particularly appealing because it focuses on companies with high free cash flow, which, like I said earlier, often signal financial strength and stability. These companies are not only capable of delivering consistent dividend growth, making them attractive for income-focused investors, but they also tend to produce better earnings over time. CALF top sectors, consumer discretionary, industrials, and energy, highlight its diverse investment strategy. The fund's largest holdings include Mueller Industries, Consol Energy, and Signet Jewelers, each a leader in its respective industry. This combination of strong cash flow and diversified sector exposure positions CALF as a compelling choice if you're looking for both growth and reliability. Since its launch in June of 2017, the ETF has delivered an impressive annualized return of 12.2% through March 31st, outperforming the S&P Small Cap 600 Index, which returned only 8.6%. Please share your feedback with us in the comments. Like, share, and subscribe to Financially Well. And until next time, stay financially savvy. See you in the next video.